Hey everybody, welcome to the morning market briefing. It's Tuesday, May 12th, 2026. Hope you're doing well out there. We got a big day today, Ben. Lots coming through. Right now we are looking for the CPI print. Give you the preview on what's expected. And we do have a little bit of a funny number situation where we are getting the October data added back in, which the assumption is it'll make a relatively hot number hotter. But all in on CPI, we are looking for a month-over-month reading of 0.6%, and we're looking for a year-over-year number at 3.7. Both of those would be increases over what we've seen on the core. We're looking for a movement of 0.3 on the month-over-month and 2.7 on the year-over-year. I am refreshing to see if we have the data.
I think I got it.
We got it.
So 0.6 on a month-over-month, so right in line, 3.8 on a year-over-year basis. And we did have a little bit of heat on the core side, so 0.4 on a month-over-month in April, taking the year-over-year
to 2.8.
So definitely an acceleration, but not unexpected, given what we had anticipated to see on the shelter side. So, you know, they're talking about broad-based growth, but now we have a shelter number that Tom would love, and it's a shame he's not here because I know he'd love to talk about this. But 3.3%. So shelter prices
is that
going
accelerated?
Up. It's
because weren't we at a 3?
Yeah. Correct. On a month-over-month basis, up 0.6%. So quite hot. And then if you just look through other areas, transportation services were up. New vehicles were up. New vehicles were actually down on a month-over-month basis. You did have some heat on the apparel side, which is interesting and a little bit surprising to me. But then the bulk of the remaining inflation came on the energy side, and there was some heat on food. But I mean, on a year-over-year basis, you have fuel oil up 54%.
And what's interesting here, there is a chart. I don't know if it's something you can pull up, Hicks, that was in the email on home buyers. If it is something you can pull up. When we talk about the shelter component, I think this is pretty illustrative of the situation that we're talking about. But we've got a chart that shows home buyers versus home sellers. There are, 600,000 more sellers right now than there are buyers. When you think about the massive ramp up in home prices that we saw really in 2020, 2021, 2022, there was a massively higher number of buyers than sellers. And right now we are living in the opposite environment. So to be in a scenario in which there's significantly more home sellers than there are home buyers, and to say that housing is accelerating at a rate of 3.3% year over year, something's got to give. The data is belying, the big data is belying the little data. And the trend is incredibly pronounced and continuing to trend in that opposite direction, away from what the number used in CPI is showing.
Yeah, I mean, and I know we had the add back of the October piece, but it doesn't really mean a whole lot, I think, this number. And I think this will probably be the hottest number that we have for a long time. So I know the market's selling off, or at least it was. We'll see how long that continues. But this is the most telegraphed high inflation print that we've had in quite some time. So I think it's helpful to strip out food, energy, and shelter. Just like, let's cut through the noise, because everyone's saying about this broad-based inflation acceleration. And if you take out all of those things, you got 44% left of the bucket, because food, energy, and especially shelter are all major chunks. And if you take all of that out, we're at 2.3%. In January, we were at 0.2. In February, we were 0.2. March, we were 0.1. And April, we were 0.2. So we're running less than 2%, excluding food, energy, and shelter, which I know are big chunks. But
the biggest chunk is data we just don't trust.
Exactly. And even energy prices now Gasoline, I mean, it's 3% of a consumer budget, and it's okay for low-income consumers. It's 3.5, and for high-income consumers, it's 2.5. That's what it is. And so I know there's a lot of pain at the pump, but really, as part of the overall bucket, it really isn't all that much. But we are seeing significantly higher inflation, primarily because of shelter. But like again, you exclude food, shelter, and energy, 0.2, 0.1, 0.2 the last 3 months.
Yeah, it's interesting, and the shelter piece again. This isn't the first time we've talked about it. It's just going to remain there. And when we caution against reading into the CPI data, that component is going to continue to be something we heavily discount. And the reality is, if it was lower than what we thought it should be, we would be saying the same thing, because it's just such an outsized component in that calculation.
Yeah, I'm curious to see what the commentators will ultimately say about this. I think that people want inflation to jump, and that's the narrative. And so I think they'll probably just endorse this wholeheartedly and say this is what we have. It's inflation close to 4%, and I think that that's just foolishness. And I think that cooler heads will prevail over the course of the next month when we start seeing, the next CPI is going to be significantly lower.
Yeah,
like the next month over month number on CPI is going to be back to 0.2, and year over year number is going to go back down to 3, and core is going to go back down to below 2.5, and that's just kind of how the math works.
And notably, if you look at the major banks, the median forecast, for what it's worth, was a 3.7. That's really brought down on the headline number, because we came in at a 3.8. That's really brought down almost exclusively by Moody's, which was looking for a 3.6. The rest of the major banks were 3.7 or 3.8. I'd be hard pressed to say we weren't just in line on the headline side. Similarly on the core, again, coming in at 2.8 with the variability of the October data. Are we higher than the median? Yes, but this is not a shocking number. And I'd be curious to see if we see any real market movement on this.
Yeah, I was looking at the Wall Street Journal to see what they're writing, and to see if what we postulated was true. And sure enough, Chow Deng wrote the article. Inflation soared to 3.8% in April, driven by gasoline prices, which is a dramatic oversimplification.
Yeah.
And
arguably an inaccurate one.
Yes. I mean, I'm going down the article and to see where they talk about shelter, and they
probably don't.
I don't see shelter mentioned once.
Yeah. We got NFIB small business optimism yesterday, Ben. How'd you feel about that number?
Yeah, I mean, there's definitely a K-shape when we talk about the K-shape in the consumer economy, which I think is a little bit overblown, but there's definitely a K-shape in the small business versus large business sector. Large businesses are shedding employees and generating record profits and navigating through tariffs, and small businesses are they seem adrift in a chaotic ocean right now, and they don't feel good. Profits are okay, not great. It seems like every time they get a little bit of confidence, that comes back down. We're not seeing any improvement really on capital expenditure plans, even though we're seeing that elsewhere in the economy, including on the non-residential side, including on data center side. Even excluding data centers, we're seeing that, but not on the small business side. A lot of people are uncertain. The uncertainty index is still 88, far above the long-term average in the 60s. But the reason the uncertainty index fell was because when asked, is now a good time to expand your business, instead of saying, I'm uncertain, they're now saying no.
Yep.
Which is,
they're certain that things are not good.
Yeah, and it's tough to see, because I think that they're making the right decisions for them, because money is tighter and it is tougher to borrow, and you don't really want to take more on your credit line when you're borrowing it at 10 or 11%. So they need some relief on prime rates. They need some relief on growing that revenue. They can't find workers. So
Yeah, some of the commentary from the survey that I found particularly interesting. One, this is from a retail business in Colorado. Businesses seen severe impact from the Iran war, big jumps in fuel prices. Also, the cost of doing business is always rising. But our margins stay the same, more or less. So like everything's awful, but it's still kind of the same. And then interesting, we just talked about housing, and someone in business services says, my business is based on the housing market. It has to change for the better if I'm going to make it. This is my 40th year in business. This is the worst it has been. This is not someone talking about 3% increase, 3.3% increases in home prices.
Yeah. This is someone who's been through 2008 and says this is even worse.
Yeah. So interesting data when you actually talk to the people, and some of which is, I think small businesses tend to have a bit more pessimism. I think they embrace the uncertainty or the unknown a little more. The war, gas prices, margins are the same, but the war and gas prices are what's top of mind. But also, getting some of that anecdotal data in terms of how bad housing is, I think it's hard to ignore.
And I do think it's really tough if you're a small business, but there's been I feel like there has not been a calm period over the last 10 years.
No.
And that was after 2008. So
yeah,
it's tough.
Yeah, and I wonder, you do wonder, just given the news cycle and the headlines, and like, will we ever have one again? You kind of wonder, what are the conditions? We joke about the Fed all the time, talking about the moving target of, trying to keep inflation, but all these exogenous events happen. It's like, well, when are we not going to have an exogenous event?
You almost need a Schrodinger small business.
Yeah.
Just like, all this stuff is going on. Just don't open the box, guys.
Yeah, just keep going.
Just don't
make
just
more
don't
widgets and sell them.
Yeah, exactly.
Interesting policy coming out of Korea, where we're looking at a dividend that's going to be paid, basically with taxes from AI profits.
This was interesting. A big Facebook post by Kim Young Bum. He's one of the top Korean policymakers there, and it's called a citizen dividend, and essentially using lots of these profits and this tax revenue from these profits of AI companies to pay a citizen dividend, which I thought was an interesting proposal, and I would not be surprised if it comes to,
that's going to be talked about on a debate stage.
As soon as these midterms are done, people are going to be filing for the presidential election. We're going to get in that whole season, and they're going to have so many proposals. Trump has talked about a tariff dividend, which I think is obviously not on the table right now. But the AI dividend, I think, is, especially as more people lose their jobs to AI, people are even Elon Musk, this is kind of a bipartisan issue in terms of the new political parties that are both becoming more and more populist. I am not a fan. I think that we got to get rid of these policy dividends, whether it's a tariff dividend, whether it's an AI dividend, and just say, guys, we're doing really well. We're going to cut taxes, which is exactly what we did in the state of Georgia after COVID. Companies made a lot more profits. Individuals were making more money. And instead of the Georgia government coming out and saying, we're going to give a windfall dividend to all of our citizens, what they did was, over time, over the next 5 years, we're going to cut taxes, cut income taxes, and maybe we'll even get rid of them at some point in the state. And I think that's the way to do it. It's the same function as
you're getting money back into pockets,
but it's degrossing rather than making the government bigger. So it's just a fundamentally different way of viewing how you get this money back in the pockets, and I think that's what we should be focused on. But AI dividend sounds attractive to people, and it's gonna sell.
It's gonna get likes,
and it's gonna get votes.
Yeah, I think I would agree with you in that I'd rather see money flowing back rather than new entitlements. If there's anything we can learn from any entitlement program, and I don't say this with a negative connotation, though some may pick up on one, but the reality is, whether you're looking at Medicare fraud and Medicaid issues, whether you're looking at child daycare centers, et cetera, those may be top of mind, but with or without those really extreme examples of waste and abuse, entitlement programs historically in this country have done one thing and one thing only, and that's balloon out of control. So what makes me nervous about, hey, here's this thing that we're going to pay out to people, and here's the new sourcing of funding, is it's not hard to extrapolate out how that grows and becomes a real problem.
Yep.
So I'd rather see a different process, a different mechanism, but that's not going to be as catchy as the AI dividend.
Mm-hmm. I agree.
Anything else you're keeping an eye on today?
No, I mean, we continue to hear some volatility in the UK with Keir Starmer under pressure. They've had, I think, 5 prime ministers in the last 7 years, so they're trying to do their best to catch up with the French. So something to watch. Keir Starmer said he's going to stay on. Just continued political volatility that we're seeing globally, both in Europe and the U.S., and we've seen it in Japan and Korea. So,
for what it's worth, the 10-year before the CPI announcement was at a 4.442. We're now at a 4.43.
Okay.
So, not. I wouldn't say
Yeah,
that's
it
a
looks
real
like the
pronounced
market's
move.
coming back even a little bit.
Yeah. All right. Good stuff. We'll wrap it up there. We'll be back tomorrow. Hope you guys have a great day. Talk to you soon.